know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
What's up, everybody? Good morning. Welcome to the best morning show in finance. It's the morning show. I'm Spencer Israel, joined as always by JC Parets, and a special guest host joining us today. It's very exciting. Before I bring him on, let's run my intro. Actually, no, let's bring JC on, then the guest host, then I'll run the intro, then we'll do all that. So, JC, what up?
What's up, Mr. Israel?
Mystery guest host today. Who could it be?
Who could it be? I don't know. I think some people have an idea.
Well, because I told him to tweet it, and he did. So, but that's okay. Mystery guest host is drum roll, please. Oh, if I had my Stream Deck hooked up, I could do my drum roll. It is Jeff Hirsch. Yes, Jeff Hirsch, editor of the Stock Traders Almanac. Let's get him on the show. Mr. Hirsch.
Good morning. Hello.
Hirsch.
Welcome.
What's up, fellas? How you doing?
Oh, just
man.
How are you doing? Coming off a fresh ass whooping on the golf course last week, right?
Was that what that was?
No. Jeff beat me pretty good. First time I played golf in 10 years, though, by the way. So not bad.
We were together, hanging out, walking along some nice lawns, right?
That's right. It was a nice course. We'll have to do that again.
I think so. I think we should have maybe we should host a show from there one day.
We could do it.
At least have the team out there and do some pictures.
We could do it. All right. Let's get this show started. Let's roll that intro, and then we'll roll into some charts. All right.
So no Strazza today. Strazza's still in Asia.
Still in Asia?
Yeah, still in Asia for more than two. He's got 2 more weeks out there.
What's their next stop?
They're on their way as we speak. Actually, they probably already landed in Vietnam. So they're in Ho Chi Minh.
Mm-hmm.
I hear Robin Williams now. Follow the Ho Chi Minh Trail.
Yeah. They started in Singapore. Then they were in KL. I was FaceTiming with them last night. They were in the Batu Caves and just hanging out with monkeys. They were feeding monkeys. I'm like, can you guys do me a favor and don't touch the monkeys? Please don't touch the monkeys. They're touching the monkeys. Probably not a good idea. You want to show some of those pictures there, Spencer?
Oh, we have 10,000. How would I even find them? Oh, wait. I think I found them already. That was fast. I didn't realize they were at the top of the page.
There's a monkey one on Twitter.
Yeah, here. Well, so here's a few from yesterday.
Super fun.
Well, I guess today it'd be today.
That was this morning over there, last night for us.
Right, last night for us. Yeah, today for them.
Yep.
Yeah, look at that.
I had a monkey experience once.
So there's Joel. Look at that thing. I've been there. It's crazy, man. This is in Kuala Lumpur. These are the Batu Caves. It's a Hindu temple, if I remember correctly. They made my wife rent a skirt to wear like a wraparound because she was wearing shorts because it's 200 degrees in Malaysia. Right. Because it's a temple, so she had to cover up her legs.
Interesting.
Lucky them.
Strazza's was like, I'm wearing shorts. I'm like, well, you're not a female.
You're not. All right. Today we learned. All right. So the guys who are in Ho Chi Minh, they'll be there for 2 days, 2 full days, I think, and then on to Bangkok from there.
Hold on. You want to hear something funny? I mean, not funny, but something that almost happened. So once a year, in Malaysia, they got all these palms and they get the palm oil, which is why they have traded so many palm oil futures in Malaysia. So in 10 days, they're actually going to burn all of them. And what happens is everybody has to stay inside. If you're in KL or you're in Singapore, you have to stay inside because of the chemicals that come out from the burned palms. And that's coming up next week. So could you imagine if they would have flown all the way out there and had to stay inside because they're burning palm trees?
Like
So,
the Canadian fires.
crisis averted. Crisis averted. I don't
That's
like the Canadian fires, but way worse.
But like on purpose.
But on purpose. Right, exactly. Oh, the Canadians did that by accident?
Well, I think it was poor forest management, they say. I mean, I don't know.
I don't know.
I mean, you got they're blowing off flaring natural gas in dry forest. What's going to happen, you know?
Yeah. What could go wrong? Spencer, before we get into Jeff Hirsch's seasonal charts, you want to do a quick little state of the markets? A little how you doing?
I do.
All right. So for me, we do this all day, every day, been doing it for 20 years. One thing that I've learned the hard way, as most of the best lessons are learned, Jeff Hirsch, is to keep an open mind, right? The market doesn't care what I think. The market doesn't care whether we were successful or not in the first half of the year. As Babe Ruth once said, yesterday's home runs don't win today's ball game. So we always want to be looking forward. Humans do a poor job of avoiding having anchoring bias. So in other words, I own Apple at this price, so I don't care if it loses 50%, I'm still up. Like, that's the dumbest thing I've ever heard, right? So the market doesn't care where you bought something or where you sold something. So we always want to be looking forward, and we want to keep an open mind. So I've been getting a lot of pushback, on social media and, over email about how aggressively bullish we have been over the last year, right? And throughout that time, they're like, but JC, the recession and the inflation and the Powell, and there's always something, right? But price continued to dictate and indicate to us that we should be spending the majority of our time looking for stocks to buy, not looking for stocks to sell. And that's worked out really well. We actually got off to the greatest start to a year in the history of the NASDAQ. We've never had a better first half to a year ever in history. And now as we go on to the back half of the year, Wall Street sell-side analysts have never had a more bearish outlook for the second half of the year ever. So best first half of the year for the NASDAQ of all time, most bearish outlook by Wall Street in the second half ever. So for me, that's already a catalyst because they came into the year super bearish, right? They came into the year thinking that 2023 was going to be a bad year. As it turns out, it's the greatest year ever. So they're already caught off guard. And what happens is now you have that career embarrassed. They're already wrong. And rather than saying, hey, guys, we made a mistake, it's actually a bull market, they would rather lose their customers tons of money than lose their jobs, right? So it's a career risk situation. So it's our job as investors to exploit their flaws and the bad position that they've put themselves in for our own profits, right? So I think there's already like an inherent short squeeze opportunity. And it's not so much a short squeeze opportunity as it is an unwinding of poor positioning. And based on what I'm seeing from the analyst community, we're still nowhere near the end of this unwinding. We're coming off some of the most pessimistic sentiment levels of all time. And from one extreme, we tend to go to the opposite extreme. So the unwind has begun, obviously, but I don't think it's anywhere near being done. So the question becomes, all right, JC, great start to a year. We're all making money. Everybody's happy. The perma bears, want to blow their brains out. Like, it's just a disaster for them. Like, how can the market possibly continue to do so well, JC? This is unsustainable, JC. Yeah, maybe. But what is the catalyst? The catalyst, in my opinion, is the United States dollar. Throw up that dollar chart there, Fonz. This is it, guys. The dollar's really been selling off over the last few days. Down again this morning. This has been it. If you look at this chart, when the dollar peaked at the end of September, early October, that's when stocks really, really started getting going. The majority of stocks had already bottomed out last summer, but it wasn't until the fourth quarter that really that parabolic move got going. And, what was it? In the fourth quarter last year, S&Ps were up 7.5%. That's 3 times the average return for the S&P 500 in a given quarter. S&Ps were up another 7.5% in the first quarter, another 7-8% in the second quarter. You know, in bear markets, stocks don't go up every quarter. Just an FYI.
Wait a second. What do they call those 3 quarters, JC?
Yeah. We call those when stocks just keep going up and more are participating to the upside. We call those bull markets where I come from. So nevertheless, it's become a situation where the stock market continues to do well despite the dollar not falling over the last several months. It's kind of just gone sideways. So it's more like the dollar doesn't necessarily have to fall apart. The stock market just likes the dollar not strengthening. But what if the US dollar does fall apart? Throw up that chart once again, the dollar index on its own. You know, the negative correlation with the dollar and the S&P going back to 2016 has been incredibly negative. When you have that weaker dollar, stocks are bid. If this dollar index breaks this consolidation and resolves lower, you're looking at the dollar index down near 90. You're probably looking at the S&P 500 up near 5,500 at that point. Here we are at 4,400. I got to tell you, if the dollar gets to 90, stocks are a lot higher, in my opinion. So if you're looking for a catalyst to potentially take stocks much higher, in my opinion, you shouldn't look at arbitrary things like earnings or the economy or anything like that. I think it's specifically the dollar is the catalyst that could get this party, continuing to rock and roll. Emerging markets have really struggled, guys. You know, it's been the United States and it's been developed markets. Europe has been killing it. Japan's making new 33-year highs. Germany new all-time highs. UK all-time highs. France all-time highs. Denmark all-time highs. They tell me we're in a bear market, Jeff. I've never seen so many all-time highs in my life in a bear market. And more of them, by the way, continue to make new highs. So, you know, for me, if the dollar rolls over, I think that could be the catalyst to get some of that rotation into those emerging markets. Show that negative correlation between the dollar index and EM. You can see it down below. That's the 3-month rolling correlation. There's a lot of red down there. That means there's a strong negative correlation between the dollar and emerging markets. So if the dollar's falling apart, I think that's a tailwind for EM. You can see the emerging market currencies ETF, CEW. This one comes from our friends over at Wisdom Tree. Throw up the CEW. That's emerging market currencies, guys. If this thing is going up, it means the dollar's going down, and I think that's a tailwind, like I said, for emerging markets. Look at the Nifty 50 making new all-time highs. Speaking of emerging markets, you know, before we came on air, Jeff was like, "Oh, JC, any emerging markets standing out?" Yeah, freaking India. You think India gives a damn about this Powell guy? You think Indian stocks care about what's going on in DC or in New York? Or they don't care. Nifty 50, new all-time highs. The Nifty Bank Index, new all-time highs. I was told we were in a banking crisis there, Jeffrey. Some kind of banking crisis that we're seeing. And then finally, the last one that I want to show here is gold. You know, JC, the dollar's been weak. How come gold can't get going? You know, I think it's a real rate situation. We've seen real rates continuing to spike higher. That's worse for gold than a stronger dollar, I feel like. So with real rates continuing to be strong, that's going to keep putting pressure on gold. And there's really no reason to be aggressively long gold until we're finally able to break out above those 2020 highs. So, you know, I think patience is necessary, even with the dollar falling apart. I think it's a real rates situation. Maybe I'm wrong. Maybe the dollar falls apart and gold starts to catch a bid. That could very well happen, but I got to see it first. Got to see it. In the meantime, we want to stay patient. We want to look at stocks. And I wanted to give a shout out to one Spencer Israel. Shout out Spencer Israel for pointing out Mattel, M-A-T. Look at that, Spencer getting a shout out. Usually we're just ripping on poor Spencer. This time, he's getting a little bit of a shout out because, listen, I just like the pattern, right? I really like topping patterns that are not tops, right? That end up being just consolidations within an ongoing uptrend. Spencer has his conspiracy theories about like movies or whatever.
It's not a conspiracy. It's
Yeah,
not.
maybe. I don't know. I don't know anything about like what movies have to do with Mattel or whatever. You can have your opinion, but I do appreciate you bringing up the chart, despite the silly reasons in which you find yourself buying the stock. I got to, if we're above that 19 or so from the long side, I like this one. I think it goes on to make new highs and we get in the upper 20s. I like this one, Spencer. You want to tell the folks about your conspiracy theories about movies?
It's not. Oh wait, you have a bit of a reverb on your end. Oh, it's coming and going. Weird. Anyway, it's not a conspiracy. It's totally logical. Mary says she was skeptic on Friday, but now she is a believer. Wavy McFly called it right. It's the Barbie trade, everybody. Barbie is going to be the hit of the summer. I think it opens next weekend, if memory serves. Anyway, next weekend, and it's going to be a blockbuster. And all of a sudden, you're going to have all these people thinking about, oh, A, who owns Barbie? That's Mattel, obviously. And B, whoa, what other IPs can we turn into movies? This Mattel stock is looking nice. Let's buy it. Barbie, box office, bullish. Yes, that's it right there. That's the thesis.
So
Jeff,
just for those of you,
I want to know what Jeff thinks about
Tell me about their numbers.
Stop it.
What are the earnings? They got acceleration of growth and revenue and earnings. What's the valuation?
Of course, I have no idea. I'm only half serious, right? But don't underestimate the ability of the market to latch onto seemingly silly narratives like the Barbie movie is going to be good for Mattel.
They also provide action figures for Star Wars, Jurassic Park, WWE.
Look, I will say this: it wouldn't shock me for a second. Like technicals notwithstanding, if my like thesis is that this is just buzz leading into the Barbie movie, it wouldn't shock me if this is a sell the news event, right? Buy the rumor, sell the news. Maybe this thing turns around on Thursday or Friday. So I should probably set a stop somewhere around here. But yeah,
stop would be good.
I also wanted to throw an update on the meta. Our upside objectives have been hit. We've been looking at a potential situation where it's a buy the rumor, sell the news on this whole Threads thing. Shout out to Sam Rowe, who's on the show yesterday, sort of giving us his opinion on the new meta Threads and everything like that. He thinks a year from now it's gone. I really trust him. Yeah, I mean, listen, I respect his opinion when it comes to social and stuff like that.
I found it a little cumbersome myself.
I'm sorry?
I found it a little cumbersome. I went on there a little bit. It doesn't have that je ne sais quoi that Twitter does, where it's just easy to jump around.
It doesn't have anything, Jeff.
It doesn't have anything, right? Fair. No desktop.
Thank you. I thought it was me.
No.
Yeah, so we were looking to maybe put a short on if we're holding below 290. Meta, if you want to throw up the chart there, Fonz, Meta has just not shown any ability whatsoever to hold below 290. So there's just no trade there. Maybe we start rolling over this week. Maybe we don't. If we're above 290, obviously you cannot be short. Maybe not obvious to you, but definitely to me, I don't want to be short. If we're below 290. So I don't have a position. I'm still eyeing it. If we're able to hold below 290, I'll be looking to put a position on. This thing's freaking tripled off the lows. There's a lot of market memory here going back several years.
I don't like it.
Yeah, like I said, if we're above 290, there's no trade here. But if we're holding below 290, I'm going to look to put on a short.
Something I call a cantilevered pattern. It looks like it's ready to fall over. I mean, that's not a real technical pattern, but for me, it looks like one of those buildings that should not be standing up.
Like the Leaning Tower of Pizza.
Or some sort of, one of those Frankie or whatever, one of those architectural things.
Listen, Jeff, if it's a pattern to you, it's a pattern, right? You do what you want, right?
I know. I march to my own technical beat.
As you should. Yeah, to each his own.
Yeah.
It's all good.
Quiet period of time here. Summer, I mean, a lot of people are getting bullish. You were talking about the last 3 quarters. You know what those 3 quarters are in the 4-year cycle. That's the sweet spot, man. So there was a lot of things that converged last October when we all got bullish together, the select few of us.
Cheers to you there, Jeff. Cheers, buddy.
Thank you. You got bullish even earlier with the small caps back in June, which was a great call with the new lows bottoming out. But a lot of people have come off the bullish sentiment, and if you look at my charts, I don't know if you want to go there now, but if you look at the history and we're tracking it, and one of the things that we know about seasonality is that it's got some momentum to itself. When it continues to track, it tends to keep following. And you had mentioned the first half. Would you say NASDAQ was the best one ever?
Best first half of the year in the history of the NASDAQ.
I think you got to look back at 75 and 83, unless you're talking about the NDX or something.
We're talking about the NASDAQ 100. And Jeff, you're the only one left that was still around back then. You're a lot older than we are.
The only one on this call, that's for sure.
Yeah,
I think I was five. I was 5 when it started.
Best start to the year ever.
For the 100, yeah. I mean, the Qs and such, but the regular full composite, third best, still fantastic. The thing here is that along with the bullish sentiment, which is sort of people jumped on the bandwagon the last couple of months, and that started to fade a little bit. But looking at our table here, with the 20% first half averages there. Is a little bit of softness in July and Q3, which is very typical on the seasonal chart, and also for pre-election years. Years finished strong, which we see. So, I'm not buying a whole lot of stocks right now. Our portfolio is thin. In the newsletter portfolio, I've sold some stuff myself. I only hold a few things. I moved into bonds, taking some interest rates over the quiet summer months. But that's what we do with the Almanac. We kind of get quiet. And do a little research and get ourselves and keep our cash on hand and get ready for that fat pitch in the fall. This is just July. This isn't.
When does the fat pitch in the fall get going in your experience exactly? Like when is it? Like a mid-October? Is it like right? You always say, what do you say? You say buy in October and get yourself sober?
Buy in October and get yourself sober. I mean, October is that inflection point. I mean, it sits at this point on the calendar after the worst 2 months of the year, August and September. And when it sets up like that, you don't anyone who buys bottoms and sells tops they call them liars. I mean, sometimes you get it, sometimes you don't. But you want to look for that turn afterwards. And October tends to be that place, both sitting, at the beginning of the fourth quarter. And there's that October 31st deadline for 40 Act funds where they have to reconcile their accounting, and it creates a lot of churn in the market, in addition to people ramping up, money managers and individuals ramping up for the year end. And pre-election year chart, if you want to pull up the NASDAQ pre-election year chart that I sent you, which is awesome. This is just the seasonal pattern of July, which, we kind of ran that ahead. This is the sweet spot here. It's the 4-year cycle. You can see here in the solid lines. Okay, that's the one I was talking about. So, pre-election year in the blue line, my aggregate cycle, that's the 4-year cycle, the decennial cycle, and all years ramped together, and then the all years at the bottom. You can see NASDAQ this year way above the averages, but tracking that pre-election year trend along that green line. And we may have peaked a little bit early here. There's usually this mid-year rally. You can see it on the chart there from the last few days of June through mid-July. I think we front ran that a little bit with the market being so just rallying pretty hard in the AI chip driven rally. But you see the yellow box kind of says it all. I mean, there's a sideways
why do you say it's an AI chip driven rally? There's so many things going up that have nothing to do with AIs or chips.
No, just the last little run in June, that little spike up was really driven by the whole AI chat.
Industrials are making new all-time highs. What the hell are you talking about? It's not just the tech. And what do industrial and engineering stocks have anything? And what about home builders? What does that have to do with AI?
Has nothing to do with it. We're looking at the NASDAQ here, though.
He got you there. So, he got you there, JC.
I mean, we have one of our stocks.
When you're right, you're right, Jeffrey. When you're right, you're right.
Just for example,
I should have used that 8-iron like you said the other day.
You're fine, man. Big lummox, you're good. But looking at some of the stocks, like even when we screen for stocks in the fall, we look for stocks seasonally. We do not just technical. We overlay with our fundamental screen. And one of these stocks, Super Microcomputer, comes through our screens, really throwing off great, numbers, earnings, revenues, technically sound, underfollowed on Wall Street, hit all of our criteria. Boom, it's up like, it doubled for us. It was all part of that chip-driven, AI-driven rally for NASDAQ and the tech stocks. And, that's one of the few we have left. So we've thinned out our portfolio. We cut our stops. We trail them up. And there's only a handful of stocks left. And we'll be sitting there with a whole bunch of cash ready for the fall. So, the summer doldrums, I threw a chart up at you guys while we were talking pre-show. This volume tends to dry up. I can flash it on the screen if anyone cares from an Almanac page. See a little.
Oh, wait, hold on. Wait, I'll blow you up here. Let's make that bigger. Okay, still can't see. What the heck is that showing?
This is the average yearly volume for NASDAQ on the bottom and the New York Stock Exchange on the top. And the green shaded area is that weak summer doldrum period that we're in right now, that we've entered, where people do things like they go down to the Jersey Shore, they take their colleagues out to the golf club. Some of us go on other trips, and we take a beach house, and the kids go away at camp, but everyone's sort of doing other stuff away from the street. Volume tends to dry up. When you don't have so much volume, stocks don't really go up as much, kind of go sideways. Not looking for a new bottom like the perma bears and the recession callers. Hey, when are we going to get that recession that everyone was talking about?
Dude, we've been in a recession. We've been in a recession for 3 quarters. I freaking love it. I wish we had these more often.
Our view at Stock Traders Almanac was Q1 and Q2 of 22 was the standard, 2 quarters of negative GDP recession. All the other countries still do that. For some reason, we had to adjust that for COVID. And, just to get a little bit deep, we went back and looked at some of the Fed minutes back in the 80s when everyone was saying, oh, this is the worst yield curve inversion since 81. And if you go through, the Fed was different back then. Now they think they're super smart, and they're trying to front run and dictate to the bond market what's supposed to happen. Back in the old days, they would follow the bond market and meet every so often to adjust their prices to reflect what the bond market was saying. There's a meeting from back in 81 when we had that in yield inversion curve. They said, well, if something goes wrong with the bond markets, we'll adjust our rates as long as it stays within a range of 15 to 21%. Not a quarter point, like 6 percentage points. They were talking about this range, and it was all based on what the bond market was doing. So with that being the case, perhaps the yield curve inversion trails the recession instead of leading it like it did when the Fed used to follow the bond market instead of try to lead it. Just a thought. In addition, you were saying that the dollar, JC, is the sort of factor that could move the market up or down. What about if the Fed decides to pause and stops being hawkish? I think that could be a factor. And also, that dollar chart to me looked like it could go sideways, just like the market seasonal chart that I showed you, especially after, tracking the seasonal trend so much. So we're looking at a few shorts in the industrials, as you mentioned, and the transports just right out of the select, the sector seasonalities in the Almanac that we track every year. We're looking at a short. We wanted to sort of break down either before. Let's see, what's the numbers we had here? We're looking at a breakdown below 240, below 241, before we short that. Is that that's the transports, right?
Yep.
On the XLI. Sorry.
Yeah, IYT too. If it starts to break down, because it's in the process of trying to break out of a monster base, which obviously historically is not the best thing to be shorting. But to your point, if we start to break back below those August highs, then maybe there's a short entry.
Right, and it's also been tracking the seasonal bullish pattern. So when it tracks that well, it tends to roll over here in the summer. So we're looking at that breakdown point. And then for the industrials, for the XLI, similar chart pattern. Below 103.90 is our price, or 104 for if you want to drill one of your big thick lines there. So those are a couple of the shorts for the worst months that we're looking at that are not just historically seasonally weak during this period, but set up this year. We're still holding on to a few sectors that we like. I own the XBI still. Biotech is a great sector for the worst months, outperforming. Average gains are, super strong, but the plurality of gains is a little bit, it's a volatile index.
Yeah,
sector.
I want to mention what Dan over on the chat is talking about, how shorting anything in industrials or transports is nuts. Yes, maybe right here, right now, because it's still heading higher. But if these breakouts were to fail, and what Jeff is pointing out, these breakouts are to fail, and we're breaking back below those former resistance levels, in that situation, a short entry would make sense. So I agree with you, Dan. Right here, right now, the market is itching to break out. Sure, shorting anything in industrials or transports, it's nuts. I agree wholeheartedly. But that's not what Jeff is saying. Jeff is waiting for the breakdown to initiate a short. And not for nothing, if that does happen, I agree with him. It's probably going to be a good short. So I'm with you, Jeff.
I mean, thank you. It's pretty much the monthly pivot points on the daily chart that is that breakdown level that we're looking at. I don't know. I'm glad you like those prices. So we're holding a few things. You don't have to be always buying stocks. I mean, people, traders, investors, are always, what are we buying? What are we buying? How about, cash gives you time to think. This time of year, we've come a long way. Yeah, we got the best NDX ever, the third best NASDAQ first half ever. Everyone's gotten off the bearish bandwagon and jump on the bulls, wait like 6 months behind us or even 9 months behind us. Time to maybe, take some profits off. I mean, with our individual stocks, we sell half on a double. We let our stops rise up, and we let the market, dictate to us. I'm proofing the Almanac right now, just the page proof for the 24 edition. And, you got to read the quotes to make sure that we're typeset properly. And, of course, the Marty Zweig, the tape, I never fight the tape, the final arbiter, and there it is. I mean, this is technical analysis, incarnate.
Jeff,
don't fight the tape.
Can you believe some of these serial killers out there that say silly things like "Don't fight the Fed"? Like, what fools? It's "Don't fight the tape," you idiots.
The tape. Its price is
I don't know what he's talking about.
I put one of Ralphie's quotes in there. Price is fact. I forget which off the top of my head. It's a new one, but everything else is just opinion, right? I mean, earnings are opinion, price is fact. I mean,
yeah.
You have something there?
No. It's funny that Jeff mentioned cash. I'm getting emails like it seems like every week from my bank. Hey, we just raised your interest rate. Hey, we just raised your interest rate. Hey, it's
money market fund.
Oh my gosh, the flows into money market funds in the first half of the year, it was ridiculous. I don't have the number,
but it started last summer, guys. Last summer, I remember everybody being like, "Oh, I'm getting 5% on my cash.
And
cash is king. 5% of cash."
The I bond.
That ended up being the worst thing you could have possibly done with your money last summer. Is sitting around getting 5% in your cash. You would have bought stocks instead in that period. You'd have doubles and triples at this point. So when it made the most sense, quote unquote, to be in cash, that was actually the worst thing you could have possibly done.
I'm only saying now, for the worst 4 months, worst 6 months of this particular year, it looks great. We haven't had this opportunity to park, in the sell in May period or the worst 4 months period. Haven't had that opportunity to park cash and get some rates on it. If you look at that 4-year cycle chart, which I know you run one also, I mean, it just set up. We had the quintessential midterm year bear market with the October bottom. I mean, it just, when that jumps out at you, and I get concerned that it's going to stop working. So far, it continues to track the trend of that cycle on the three main indices, whether it's the NASDAQ or.
But I like how while you're tracking the seasonals, for execution purposes, you're waiting for the market to react to those seasonals rather than just blindly selling in May and going away, for example, or rather than blindly buying in October and getting yourself sober. You can get yourself sober and wait to buy, right?
We use the MACD. I mean, it's simple. It's perfect enough. You want to throw up a chart of the Qs or the IWMs with with a MACD overlay on it. We could look at that, or I could just, you can go to my website and look at our sell signal, if you want to check it out. But June 23rd, we had the crossover for NASDAQ. We had our April sell for the Dow and the S&P at the end of the best months, and that was pretty timely. And again, the June 23rd, it went up against us a little bit for a few days, but honestly, it gave all the followers and subscribers a chance to patiently and calmly, liquidate their positions and take some profits. So
I do want to mention before we forget Jeff's site, since he just brought it up. I'm dropping the link in the chat. Oh, actually, there's two links you gave me. There's the
one's got a little code.
Okay. I'll put the link with the code in there. This is for the. Okay, here we go. I'm dropping the second link. Ignore the first one. I'm dropping the second one in the chat right now. And this is basically everyone who is a subscriber gets the Almanac for free. Is that right? Okay.
Yeah.
So there's that. And there's actually a third link. After, I don't know if this is I don't know if this is a topping signal or what, but after 11 years, a hiatus of 11 years, you are once again putting out the Commodity Traders Almanac. There was the last one you did. You are in the process of doing the 2024 version. It's not done yet, obviously. If you want to sign up for that, or I guess notifications for that, I just put that link in the chat as well. Is that maybe a topping signal, Jeff? That you're doing the commodity Almanac again?
He's buying the dip. He's buying the dip.
All right.
By the way, Spencer, by rule, for it to be a topping pattern, you need an uptrend in order to top out. And if you've seen any commodity charts, there are not a lot of those out there.
Yeah, that's true.
I am my own best contrary indicator sometimes. So.
That's what I should have said. Contrarian indicator, not topping signal. Contrarian indicator. Sure. Anyway, so yeah,
I think the commodity thing is got some legs to it, but yeah, it's come quite a ways. So
speaking of a weaker dollar, hello.
Yeah. You think it's going to get that weak?
I mean, listen, I don't know what's going to happen. My crystal ball's in the shop, but if the dollar index drops to 90, I have a funny feeling you got the S&P well above 5,000, 5,500. You probably got oil above 100. Probably copper's holding above 4. You're probably getting a bid in commodities, I think.
And if it stays flat?
If it stays flat, I mean, the stock market has proven that even in a flat dollar, stocks continue to do well. So it's almost like stocks just don't want a rising dollar. Like the dollar doesn't necessarily need to be falling apart. A sideways dollar is bullish too, but if the dollar falls apart, I think stocks and commodities are probably doing pretty well there in that environment. You're probably getting a bid in some of the more material stocks and things like that. I don't necessarily see that as a headwind for those types of stocks.
No.
I think it's
stable currency is good.
Yeah, and I think that does happen. I mean, the trend in the dollar's down. The trend in equity, so you sort of reverse engineer it. If this is a bull market and the market continues to prove to us that it is, and we're going to go substantially higher in equities, and that's the bet that we're making or that we've been making, then if you reverse engineer what the dollar's doing in that environment, it's probably not going higher. So yeah, I'm thinking lower dollar, yeah.
That chart that you threw up there looks a little like just kind of flatlining to me. It could break out one way or the other. It could also bounce along that support level for quite a while.
Agreed.
I mean, I'm not bearish. We're cautious, patient during the worst months, but I'm expecting new at least recovery highs, if not all time. Towards year end. I mean, looking at the pre-election year and 4-year cycle aspect of things, there's this move from the pre-election year low to the midterm year low to the pre-election year high of about 70%, a little less, 68% on the Dow, on the NASDAQ, and about 38-40% on Dow. We're seeing that. But most of those highs happen in December of the pre-election year. So you got that third quarter lull that we're kind of set up for here. And in the fourth quarter, new highs. Election years have gotten a lot better recently. And what I'm writing about what I've written about in the 24 Almanac coming out is the power of a sitting president running for re-election, regardless of what happens. Just the fact that you've got somebody in there that's already in there takes out the uncertainty. You're probably going to continue the same policies. The market knows, how it's knows how to position itself with the incumbent administration, and that's most likely not going to change. I mean, some people do not get reelected. We've seen that, but the chart that we have we put out there is much stronger. For it's about 12.8 or something percent for sitting president versus an open field like minus 1.5% for the year. So, and that gets us to the super boom level. Remember that book, man? 38,820.
We got there a little quicker than you thought, though, right?
Not too much quicker. I had my projected year was 2025. We're still not there yet. Maybe it's potentially ahead or right on.
Yeah,
schedule.
hopefully we're earlier than you thought.
That might mean that we get the other side of that. We'll have to see where we're at. I'm thinking we might end up with a more of a sideways, secular market where there's a stock pickers market, a lot of seasonality.
I can see that. If we're getting sector rotation and we start getting some profit taking in technology and into materials and energy and some of the sectors with much lower weightings, you could be a scenario where some stocks are absolutely ripping, but the bigger ones are putting pressure on some of the major indexes. So the indexes aren't making much progress, while underneath the surface there's a lot going on. Kind of like the back half of last year, for example, is probably a good way to put it. Spencer, we got a couple of minutes before Kimmy drops in. Anything moving that you want to mention?
No, nothing really that jumps out to me. I mean, in terms of pre-market action, you have a few stocks like Beyond Meat is moving a little bit today. Zillow caught an upgrade, so they're up today. Not really sure. I guess it was a fundamental evaluation call from Wedbush, I think. Affirm randomly up today. We've talked about the EV names for a while now. Rivian is going parabolic, so Rivian and those names are Neo is breaking out again, but more of the same there. I did want to mention Amazon, just because it is Prime Day today and tomorrow. Prime Day, so everyone get your shopping on. Not typically a catalyst for the stock, but just wanted to bring it on everyone's radar, because it is Amazon. And there's a chart you can see. Thank you very much, Fonz. So I don't know if you want to break that down, but I just wanted to throw that on everyone's radar. That'll be in the news today and tomorrow a lot.
Thanks for the reminder, Spence.
See, I knew somebody would forget.
I just texted the wife.
That was dangerous. And what else jumps out to me? Pre-market, Dave and Buster's randomly down 5%. That looks like a downgrade to me. Or no, kind of quiet out there. I don't know. Not too much to speak of in terms of pre-market movement. As Jeff said, we're in the summer doldrums. Generally speaking, in the time period between earnings season, there's just not a ton of volatility overnight.
What about on the old cryptocurrency markets? Look at Polygon, up 10% today. Big move in Polygon. It's the first chart there, Fonz, if you want to throw it up. Look at that Polygon, man. I mean, this is the Matic. 10% move. Interesting. We haven't gotten a lot of action from the altcoins. It's really kind of been a Bitcoin story. Great year so far for Bitcoin. Those of you who are wondering, on Polygon, ticker symbol MATIC, M-A-T-I-C. This is a $7 billion cryptocurrency. It's the 12th largest, obviously one of the popular ones. Big move today, 10% move. So, with the moves that we're seeing in some of these crypto miners, I don't know if you saw Hut 8 mining continues to do well, absolutely ripping over the last month. I own Mara very aggressively, so have owned it, so that's been a good trade. And Strazza, who is right now in Vietnam, my understanding was that he was buying call options on the plane to Singapore on Riot. So Strazza, nice trade there.
Boy, guys trading from 30,000 feet. We have a few questions in the chat. I see them. Don't think I don't. We'll get to them in a second. But before we do that, let's bring on Kimmy Sokoloff, find out what she's watching today. I know she's got some ideas. Somebody in the chat mentioned one, I think, already. Maybe that was internal. I don't know. But let's get Kimmy Sokoloff on the show right now and see what she's watching today.
Good morning.
Kimmy, man, 5
I
for
love-
6 yesterday. Crushing it, Kimmy. Crushing.
Jeff. Good morning, everyone.
Yeah, Kimmy, how you
Good,
doing?
how are you? I met you once at the CMT meeting.
Which one?
One of them
This
in
year
New
or
York
last
City
year?
a while ago. I came over and introduced myself to you.
One of the chapter ones.
Jeff, remember we used to do that thing where we'd all get together, talk technicals, then go have drinks. It was like a whole thing. We do it all the time. You know, it was wild. Kids these days, they don't know.
They don't know. We used to like downtown.
mean?
We used to be right by Battery Park, around the corner from where I lived.
Before Zoom?
Before Zoom. Let me just say something. Kimmy Sokoloff, yesterday's trades, long TLT for a profit, long Nike for a profit, long Neo for a profit, long Moderna for a profit, shorted Tesla for a profit, called out a nice setup in PayPal, shorted DraftKings for a tiny little loss, 5 for 6, Kimmy, absolutely crushing it. Kudos to you. And today, I've been looking at Meta for a short opportunity and looking for it to be holding below 290 in order to initiate that short. And what I have found is Meta's inability to hold below 90. And in my experience, that is information. And the fact that you're coming out here and you're looking for a long position in Meta after my short trade is not getting triggered at all makes me wonder. I like where your head is at, Kimmy. Talk to me about this trade.
Well, I mean, listen, I'm going to see how it holds. These names all need to pull in. Meta will break 290 at some point, okay? And I'll capture that short. But
I thought it would have already done it. And I mean, I've had my finger on the trigger, like ready to go, and there's been no trade. But the fact that there's been no trade is bullish, I think.
Right. I mean, listen, I'm not looking to marry this trade. I'm looking just for a move to 300, let it capture 300, and I say, bye-bye, I move along, right? You know, I'm not looking to marry the trade. I think these names are very extended, so we'll see. You know, yesterday, I entered the short late in Tesla. I did recommend it at 272, down to roughly 265. Some people did catch that short down there, did catch that short at that time. I came in late and just press that one real quick, just a quick short. You know, we'll see what goes on at Meta. PayPal, I recommended. I didn't take the trade, but I recommended it in the room. I'm going to watch it again today, see if it go to 71.30. I did, you know, sometimes when you're trading and you make recommendations, you miss your own trades. So
I got that t-shirt.
What?
I got that t-shirt.
Yeah, right. So I miss my own trade sometime. So Crowd yesterday, I recommended in the room, CRWD. I'm going to watch it again today. I recommended it at it popped. I missed the alert. I had alert at 148.80. I missed that alert. And then I said, guys, it's pulling in, you know, to around, it pulled back into 148 to 147.80. And I said, you could take the trade here up to 150. And it did run. I'll watch it again today. So just some names I'm looking at again is Meta, Crowd, PayPal. I'm going to look at ExxonMobil, see if it gets a pop, you know, so we'll see.
Yeah, we're seeing some movements in the energy stocks for sure. We started getting into Chevron, me personally, a couple of weeks ago. Let me ask you this, Kimmy. You made a great point last week, how you had half day Monday, 4th of July Tuesday, then you know, all the big boys are in the Hamptons, down at the shore, you know, hanging out with their family. They're not trading. So that was last week, low volume. Now we're back, right? The big boys are back. Big boys are back. I'm in Avalon in the beach, so I guess maybe I'm not a big boy. If I were a big boy, I would have been in Avalon last week. So here I am at the beach, but the volume's coming back. How are you approaching this market differently this week than you were last week?
Well, no, I mean, you could look at the trades last week. We did a lot. I mean, there were trades. I had 5 trades, 6 trades, 7 trades, and we did really well last week. I think I, you know, had to stop out of 2 trades, you know. So for a holiday week, I was shocked. We did that well. You know, I was like, wow, how did that happen? You know, sometimes I'm like, just things kept popping up, but it was very light volume, and you know. Not that I'm trading it like normal, but you know, tomorrow we have CPI in the morning. I probably won't give an idea recommendation. Right? Tomorrow's Wednesday. A little confused on days. CPI tomorrow morning. We have a Fed speaker today. I think Bullard or something. So we'll see. I know. I do look at JC's face. Like, no.
They just talk too much. Like, just shut
they
up
do.
already. Enough.
They do talk too much. It's like me. Shh.
Yeah, they do. I think we all agree.
Kimmy, you keep doing whatever the hell you're doing. You just need to keep doing that. All right.
Yeah.
All right. Guys, if you want to get into Kimmy's room, she's there every day calling out trades as they're happening. In some cases, calling out trades that she's not even taking that she wishes she took. Get into the room. The link is on the link is in the chat. The QR code's on the screen. The link is also in the description. I don't know what more I can say. It's there. Get into her room. It's premium. It's freaking awesome. That's where I go to hang out after we're done here, and it's fantastic. So, Kimmy, as always,
guys.
Thanks a lot.
Bye,
Thanks, Kimmy.
Bye, guys. Bye, JC. Bye, Spencer.
See
ya.
All right, and now she's off
Is she in the city?
she's off to her room to go trade, and the people that
Is she
are in
in
there.
the New York area?
What?
She used to live down in Battery Park City. Now she's in Savannah.
Oh, that's not convenient for us.
No, it is not.
She doesn't
We're
want
gonna
to
put
hang
the
out.
band back
She doesn't want to hang out with you anyway, bro. Don't worry about it. She might as well be in Africa.
She doesn't want to hang out with me
Well,
either.
I was reminiscing about the old CMT in New York. I thought we might have a little, when you're in.
This is a question I think for Jeff. This is from Gemma. Jeff, what's the volume in small caps over the next few months usually? Do you know? Top of your head?
It's low. I mean, I think the Nasdaq, doldrums chart I threw up there from the Almanac. I think that is emblematic of small cap volume as well as all stock volume during this period of time. I mean, it doesn't really pick up until after Labor Day, which is sort of back to school, back to work, cleaning house, restructuring portfolios. Get that September sort of negative volatility, but it's all pretty quiet volume wise, historically, seasonally over the next couple of months, especially.
And I'm going to go through the chat and find the other questions that were asked. But while I do that, I'd be remiss not to mention the hot corner. Let's do the hot corner real fast. We've got a couple of interesting things on the list today. Where's my bumper? There it is.
Hot corner. So hot right now.
All right. Where's my table? There it is. Autolus Therapeutics. Oh, 2 13Gs today. All right. That's the second day in a row. Autolus Therapeutics, looks like Paradigm Advisors, a new 5.8% stake there. CAE Inc., aerospace company defense. McKinsey Financial, 13G, they're raising their stake by 3 percentage points. 7.3 to 10%, and then some unusual options in Oxy, IonQ, and First Horizon. Ooh, a regional bank. Interesting. Very interesting.
I want to talk about a couple of these things that stand out. First of all, let's take a look at this Canadian aerospace and defense stock there, CAE. Slide 5 there on the deck, guys. This is CAE. So what are we seeing? We saw McKinsey filing a 13G, increasing their stake up to 10% from 7.3%, really just adding to positions. I'm looking at this $30 level. Sorry, that's not true. I am looking at, what is that? We're looking at 23. We're looking at about $23. That was that former support from 2021, late 21, early 22. Then we broke down last year, and now we're back to the scene of the crime. So if we start to creep back above 23 on the CAE. So CAE, for those who are unfamiliar, is a $7 billion aerospace and defense stock. So it's an industrial stock based in Canada, headquartered in Saint Laurent, Canada. I like it.
Am I supposed to know where that is? I don't know where that is.
Saint Laurent?
Yeah.
It's
yes.
north of the United States.
Oh, that's helpful. All right.
And then throw up the Occidental Petroleum there. Uncle Warren continues to buy more. He was buying more as recently as last week, if I'm not mistaken. Not the week before that, but This is the Buffett zone. Buffett continues to push levels, and now we're seeing unusual options activity. You saw a ton of activity on the call side, on the offer. 2,000 contracts going off. These are the January 2024 6250 strike. So think about that. The 6250 strike. It's what, about 5 points out of the money or so, 4 or 5 points out of the money. So, nice. And this is why we do this, guys. It's not like, oh, just because there's unusual options activity, we're going to buy, or just because, this McKenzie Financial increased their stake, filing a 13G, doesn't mean we want to do anything about it. It just means that we want to pay a little closer attention. And then finally, the IONQ. Punch up the IONQ. So the IONQ seeing unusual options activity as well. This is a name that's been popping up in some of our other scans. This is a computer hardware stock. You know where this is based out of there, Spencer Israel? One College Park, Maryland. I don't know if you're familiar with that area.
I actually had no idea. Oh, wait a minute. Yes, I did know that. Yeah, because there's not much in College Park besides.
Spencer went to college there. Maybe even gone to a class or two, right?
Go to Maryland?
I did. I am a Terp.
I went to AU. I went to America.
Hey, not far away. Yeah, College Park. I was there for about a month ago, and let me tell you, it's not as dumpy as it used to be. It's still dumpy, but not as dumpy.
Hood, right? It's in the hood.
It's still hood, but not as hood.
All right.
So cool.
Big base there. Computer hardware, seeing a lot of different stuff, man. You're seeing, consumer discretionary, industrials, technology. Those are the big three. Those are early cycle. When you look at, economic cycles and cycles of bull markets, you know what the early leaders tend to be? Consumer discretionaries, technology, industrials. You know what the three best sectors are since the bull market started last June? Consumer discretionary, technology, and industrials. Not in that order. It's actually discretionaries, industrials, then tech. So tech is actually third best. People are like, oh, this is a tech-driven rally. It's like, have you gone back and actually counted if that's actually true, or are you just repeating something that people said?
Just for NASDAQ, it's tech-driven.
No. Yeah. No, I'm just, but just generally speaking, be like, oh, it's only 7 tech stocks. It's like, have you counted? Because it's actually thousands of stocks all over the world ripping in your face all year. So if you think it's 7 tech stocks, I would check myself into a mental institution.
All right, guys. I maybe don't go that far, but the hot corner is.
You think it's only 7 stocks going up? Just check yourself in right now.
We're not doing that again. But
loony bin.
So this IONQ stocks got my attention. I just pulled it up on Market Smith. I know it's a little too fundamental for you guys, but in the same group is Super Microcomputer, my stock from last fall. So this is part of that,
Hold on, why is it your stock? What does that even mean? Your stock?
The one that was on our recommended list. It's not my personal stock, but one of our companies that.
Are you taking a victory lap, Jeff? Is that what this is? Are you taking a victory lap?
Oh, I'm just saying it's in that same sector. I already took the victory lap, saying this IONQ is in the same group as Super Microcomputer. Very strong sector, supporting the AI and all the chips, all that storage and all the stuff that has to happen in the background for AI to work. So it's in the same sector.
Why don't you tell us? You seem to be an expert at AI. Why don't you tell us some of the things that you need for AI to work there, Jeffrey?
I am no expert, my friend. But it seems to take a lot of computing.
Like all those things, all the things.
All those racks.
They need all kinds of things.
It takes special, some would say, super microcomputers to do it.
They have to be super.
Right. They got to be super.
It takes a lot of them.
It's a lot of stuff. It's a lot of
A
stuff.
lot of stuff. It's a lot of data that's got to get dealt with.
That's right. You got data.
No. Big, not data. Big data. The data is big.
There you go. Quantum computing.
Air conditioners and shit.
Quantum computing. That's a buzzword. There we go. Ivan knows what's up. There you go. It needs quantum computing there, Jeff.
Do we even know what that really means?
No, but it sounds good. It gets the people going.
All right, there's our opening bell. JC, there was a question early on the show from Stock Market Mike. JC, how do you measure the percentage of an unwind?
You don't really. It's really a number of factors. You know, you want to take a look at sentiment, right? And where sentiment was last year was one of the most pessimistic levels we've ever seen in American history. So we know that we're coming off extreme levels. You know, when you look at short interest, you know, we had a severe bear market that ended last year, and these short sellers, rather than taking profits and moving on, these idiots just added to their short positions. In fact, if you look at the positioning coming into 2023, all those growth stocks and tech stocks, they came in the most short that they were the entire bear market. So rather than taking profits, and yes, some short sellers took profits. We were short Tesla in the fourth quarter, for example. So yes, some people took profits, but that doesn't matter. In aggregate, it's what matters, and they were the most short ever coming into the year. When you look at the speculators, you look at large speculators, basically think of it like hedge funds, pension funds. Just a couple of months ago, had some of the most net short positions ever. So the unwind, I'm saying that has already been going, you know, probably has a lot of legs, because when you come off such extreme levels, you tend to reach the other extreme, and you tend to stay at that other extreme for some time. We haven't even gotten, we're like halfway there, maybe. We're somewhere in the middle. So how do we know that unwind is over? You know, the short positions are probably going to be small, if not non-existent. The short positions are probably going to be on the commercial hedger side. The speculators are probably going to be super net long. The cash positions are probably going to be super low, as opposed to historically crazy high like they've been. You know, people moving into money market funds to get their 5% at the worst possible time that they could have possibly done that. So you'll start to see cash levels come down, because why would you be in cash in such a strong bull market? So once that mentality gets there, that unwind is probably over. So I wish I could tell you that there's like this magic indicator that tells you that the unwind is over, but it's really a weight of the evidence thing. And those are some of the things that I'll be watching. I hope that helps.
I hope so too. Before I forget, guys, if you want to get the Hot Corner, it is a free daily note tracking all the biggest trades from Washington to Wall Street to the boardrooms themselves. If you want to get it, email me. The email is on the screen. It's questions@stockmarketmedia.com. Just put a Hot Corner in the name, and then I know what you're talking about, and then you'll get the Hot Corner list sent to you every single day. Okay, should we talk chart report? We have the man himself here, Patrick Donawillo, the guy who puts the chart report together every single day. So let's bring him on, and I'll get yesterday's edition up on the screen, and we can talk charts.
What is going on? How you guys doing?
What's up, Patty?
What's up, Patrick?
Jeff, how you doing?
Good, man. How you?
Good to see you.
Not for nothing. I made the top 10 on the chart report yesterday. Not gonna lie, feels pretty good.
You sure did. You sure did. I like that chart a lot.
It was like I guess it was a bar chart from Bloomberg. It wasn't even my chart.
Yeah, I mean, I was actually surprised to see that. You know, you've heard about this shift in sentiment, and you can feel it too. People are getting more bullish. More people are getting on the bandwagon. I think you said that earlier, Jeff. But yeah, I was surprised to see that people are still bearish. You know, you mentioned best first half of the year for the NASDAQ.
Wait, sorry to interrupt.
Yeah.
JC, you can't take credit for someone else's chart.
He's adding context.
First of all, I'm not taking credit for it. Patrick gave me credit for it.
He's adding
I said it wasn't my chart. I said it was Bloomberg's chart.
All right, fine, whatever.
Well, so, you know, I used for chart of the day, I used a chart that Mark Ungewitter used, and it was very similar to this one, but it was pointing out that the disparity between the top end of Wall Street strategists' year-end targets and the bottom end, that gap has never been this wide, at least in 20 years of data.
Are you saying they don't know what they're talking about?
Well, you can see there that it's mostly after cyclical lows when you're in this transition period where the market's kind of reversing and you're getting that transition between bearish to bullish. You know, confusion is not a bad thing. It's more consensus that we should be worried about.
Interesting.
I want to talk about what Frank Capillari put. That was really, really interesting, I thought. It's the first one. When was the last time that the NASDAQ had a 90% up day with Apple, Google, Amazon, Tesla, Microsoft, and NVIDIA all down all day? Has that ever happened? Great question. Shout out, Frankie.
And you know what? A couple more down, Optima had a really interesting one too. It's more of just kind of a fun fact, but they were pointing out that S&P positive despite Apple and Microsoft, the two biggest components, falling 1%, and 1 month later, 2.78%. Not too shabby.
I noticed Meta missing from that list because that was the outlier yesterday.
Right.
Was Meta up yesterday?
Yeah, Meta was up
Yeah.
yesterday. Scroll down just a little bit there, and let's take a look at friend of the show, David Lundgren's chart there.
Yeah, so that's ARC F, not ARC. I thought it was ARC at first, but it's ARC F.
It's ARC F, but similar, like, you know, similar place in the risk curve, right?
Yeah, and similar
ARC
structure
K.
too. The chart, you know, they look very similar. I'd
That's
argue.
a nice base to me.
Well,
Yeah,
there's a lot of overlap. Not like a ton, but there's like some.
Yeah,
True,
especially
true.
from a positioning standpoint, from an asset allocation standpoint. Like if you're a buy side PM, you know, to Spencer's point, like even if some of the components might be different from like an asset allocation standpoint, you know, they're moving together. Kind of like emerging markets, like, you know, India and Brazil couldn't be more different, but you know, if you're the way portfolio managers think, they're allocating assets to emerging markets. So you're going to get sympathy selling and sympathy bids, even though the economies are vastly different. There's an allocation correlation, and it's like that with these ARC funds too.
yeah. And ARC F looks even better than ARC, but ARC looks pretty good too. You know, it's coming out of that rounded base. There's been a lot of good comeback stories this year, but we haven't heard that one yet. So, you know, maybe it's on deck.
Oh boy.
Right.
Hold on. Did Mark Unwitter get the chart of the day and get in the top 10 charts?
He did. I rarely do that. But I thought I needed a good TLT chart in there. You know, it's a really important thing to look at right now. You have rates ripping and TLT kind of maybe going to go down, test that low. We've been in that range all year. So who knows? Definitely an important one to watch, though.
For sure.
All right, guys, I just threw the QR code up on the screen, but I'll put the link in the chat and it's in the description if you want to get the chart of the day delivered in your inbox every afternoon, depending on your time zone, early afternoon, late afternoon, early evening, after the close, obviously. You should get it. It's totally free, and Pat spends a lot of time every day putting that together. Also, Pat, I want to mention that you and I are doing another live event tomorrow.
That's right.
You missed the one we did 2 weeks ago. That's okay. We're doing another event tomorrow night, 7 p.m. Eastern time, where we're going to go over Pat's newest scan. We're calling it the Buzz. I'm dropping the link in the chat right now. There it is. If you sign up for that right there, you'll get this. It's not going to be a public thing. It's not going to be available on YouTube for everyone. It's a private video. The only people that are going to be able to watch it are the people that are signing up via the link I just dropped in there. And then you'll be able to watch the replay after the fact. If you can't make it live, it's totally fine. You'll still get sent the video and all that. But get that.
Yeah, it's good stuff. We're going to be talking about unusual social sentiment and kind of how we leverage this data that we have, and it's really interesting stuff. I think people are going to want to see it. So
I love the unusual social sentiment.
I know
What about the old school sentiment? Investors intelligence.
Oh yeah. I saw that. Wait, what did you just say, Jeff? You said
here's the difference. Can I explain? I'd like to explain. So here's the difference, Jeff. When you're talking about investor intelligence, or you're talking about the AAII or NAAIM and all these different polls, we're looking at it from a contrarian standpoint. When all of them are bullish, we should probably take the other side. We tend to, by the way, when they're all bearish, like they were last summer. we tend to take the other side. We did. In this case, it's different. What Pat's doing is that he's got an algorithm that's searching Twitter for increases in rates of change of mention. So it's really Twitter chatter.
More of a momentum.
So it's not
Yeah,
contrarian
exactly.
as it is coincident. So it's actually very different. But I'm glad you brought that up. It's a good question, Jeff.
Yeah, and we're not really measuring for bullish or bearish. We're just looking for any chatter at all, right? And again, it's not about the pure quantity. It's about the rate of change, right? Because obviously, if it was pure quantity, then Tesla and Nvidia and whatever would be the SPY, would be the top. GameStop.
It's just for idea flow, Jeff. You know, some of these bigger ones, it's more for the overall market environment to kind of see where sentiment is. These are stock specific stuff. It's cool.
Rate of change is a huge part of my stock screens. I mean, we're looking for the acceleration of growth in revenue and earnings, not just growth, but it continuing to grow sequentially and year over year. So big fan of that, rate of change.
This is specifically rates of change of mentions.
Of mentions.
Stock on
Twitter. That's cool. I like it.
Yeah, we call it unusual social activity. And it's pretty good.
That's JC ever done any unusual social activity?
That's funny.
Not with me, no.
You know what I was going to say?
Asia right now, you should see what's going on out there.
My issue, going back to the server thing, my issue with like the AAII is like anybody can do that. I did that one. I did that once.
I'm sorry.
Yeah, I did it. The AAII.
The thing with Investors Intelligence, and I've been tracking it for years. We're actually one of the people on there. Is not just that it's been around for a long time, but you're tracking people who get paid for their opinions. It's not just anybody's random opinion. It's people that consistently year over year have members and subscribers that are paying them for the opinion. So we tend to be on the opposite side of them a lot. I mean, right now I'm short-term bearish, seasonally bearish, but they're up at like 54.9% bullish advisors, which significantly is the most since November 21, when it was up to 57.2, but not quite in that extreme level, which suggests a big cop. To me, it supports the seasonal trading range and sideways, chop and flop action I've been talking about.
Do they have neutral as an option too, or is it just bullish bearish?
Correction would be their neutral version.
Oh, okay.
So there's three baskets: bullish, bearish, and correction.
Hold on, before we get to recess.
Recess was 15 minutes left. We're not doing recess.
I know. But I wanted to mention this because the boys are just getting to Vietnam now. They're in Ho Chi Minh. Riley probably. Let's see. Riley, has he landed? Strazza says, "quote unquote, Ho Chi Minh is my city." Okay, whatever that means.
What does that mean?
I think he's just excited to play golf with Riley.
I was just going to say, are they playing golf over there?
Yeah, they are. They're playing golf today. I think they're playing golf today. Yeah. For those of you, first of all, Spencer, drop in the chat where people can sign up to get early access to the docuseries that's being filmed in Asia, Wall Street to all streets. Our team is out there interviewing the best traders in Asia. I mean, they were literally just at Jim Rogers' house last week. They were at the Bursa Malaysia Stock Exchange yesterday. They're in Ho Chi Minh today. I mean, just unbelievable. You want to run the trailer? Give them the trailer, Spencer.
We ran it yesterday. I don't think we need to do it again.
Give them the trailer.
All right, we'll do the trailer. All right. It is a freaking. It is. It makes me smile every time I see it. It's an incredibly well made video. So, all right, I'll play it only in case Jeff hasn't seen it yet, and then we'll do it for Jeff, and then we'll keep going.
Jeff should be in it.
I should be.
The following presentation was brought to you by Centerpoint.
Hey, I'm John Carlo, the director of video content here at All Star Charts.
Brokerage accounts. Oh, shit, Carlo.
We're good. I've been with the team for a while now, and we've gone on some pretty crazy adventures. From starting a wine business in Napa, California with our friend Kyle. Next time you're up in Calistoga, find Kyle and tell them I said hey. To the streets of India to meet with mentors and friends before speaking at a giant symposium full of stock traders and analysts. To searching for Japanese candlesticks in Tokyo.
If you were a Japanese candlestick, where would it be?
We went all over town. We went to the fish market looking for Japanese candlesticks. They had no idea what we were talking about.
Yeah, candlesticks. You know I can find candlesticks?
Candlesticks? Japanese candlesticks?
Which led us to politely being kicked out of the Tokyo Stock Exchange.
Staff only? Okay. Okay, do you know where the candlesticks are? No? All right.
And now, I'm here to let you know about our latest web series, Wall Street to All Streets, a global trading adventure. We plan on sending our all-star options trader, Sean McLaughlin.
I'm the chief option strategist at All Star Charts. You know that. That's why you're here.
And our rockstar director of research, Steve Strazza.
We're out here trying to gauge the animal spirits with the stock market at new all-time highs today. Excuse me, sir. Sir, do you mind if we ask you a few questions about the stock market? No? He's definitely not buying these new highs.
On a fish out of water adventure around the world, where they will meet with trading legends, the best traders in the world, to learn directly from them on how they approach life as a trader, how they trade, what they trade, which markets they trade, and of course, local customs. I mean, this is a travel show, right? JC Parets will be cooking up fun challenges and tasks for our adventures from his trade desk back in the States. Is Strazza ready to drink snake wine in Vietnam? You bet he is. Is Sean ready to do improv comedy in a language he doesn't even speak? Oui, oui. Join us for our adventures, and we'll see you on another continent. Wall Street to all streets.
Come on. How good is that?
All right, this is what the sign up page looks like. I'll make it full screen so you guys can see the link, and I'll get the QR code off there. The link is pinned to the top of the chat on YouTube. It's also in the description right there. So you should sign up, definitely. And what does that get you, right? It gets you, first off, will notify you when each episode goes live. But also, we're going to be hosting watch parties, right? We're going to get Sean and Giancarlo and Strazza and Riley together, and we're going to do these watch parties over Zoom, and they're not going to be open to the public, and you are invited to these. We're basically going to hang out and, watch a little bit, and then just, do Q&A. It's going to be
BYOB also.
BYOB, obviously, over Zoom. Always BYOB over Zoom. And so you'll get to attend those watch parties. You'll get some exclusive behind the scenes footage, and all in all, like a better experience, right? For everyone. So the link again pinned to the top of the chat on YouTube. It's at the top of the description on YouTube. If you are too lazy to do that, and you want to scan the QR code, then you can just scan the QR code right there, and that'll take you straight to the page. And that's
it works.
It works. Good. Jeff, that's
tested it for you.
Good. Jeff confirmed it works. That's awesome.
Listen, if Jeff can figure it out, the rest of you can. All right.
That's right.
I am.
That is right. Oh wait, before I forget, Joe from the chat says, Pat, we need Bart again for a longer interview.
Funny
Joe,
you should say.
Joe, you may want to watch tomorrow's show for no particular reason. Just tune into this show tomorrow morning, and maybe you'll like what you see. Okay, it is 9:49 here on the show. If you have any questions in the chat for Jeff or Pat or JC, speak now. We'll spend a few minutes doing that, and then other than that, we can just do a little bit of recess. I know JC is itching to get out of here because he's down the shore right now. But let me see.
Pump our fists, not our gas tanks, right? Right? We pump fists.
Yeah, actually, now as of I think 2 weeks ago, New Jersey is officially the only state in the union where it is illegal to pump your own gas. I think Oregon just passed a law, and because it was legal there. It was illegal to pump your own gas in Oregon, and now it's legal. But we are not allowed to pump our own gas in New Jersey. So fun fact if you didn't know that. Okay. Is it recess time?
Guys that do it for you are so sharp.
Yeah. Right. Only
I want them touching my car.
The brightest are there pumping your gas so you don't screw it up, right?
I mean, look, It's all I know, all right? It's what I grew up with. What can I say? Seeing a lot of green on my screen, although steadily amount of red increasing, but mostly green. Okay, let's do some recess, and then we'll talk about whatever it is we want to talk about. I don't know.
All right, Pat. Best burrito in San Diego. Go.
Oh man, taco stand.
That's the name of the place?
Yeah, we got one right down the street from us, so it's dangerous, but it's awesome.
What do you get? What do you get?
You got to get the Cali burrito.
It's
got fries in it, steak, a little sour cream, pico de gallo. Yeah, they're addictive.
All
right.
I like how quickly you came up with the answer. You knew.
Oh, it's no question. It's yeah. I've thought about this many times.
Jeff, I'm planning a trip with my wife to go crash at the castle, that spa that's there by your house.
Up in Tarrytown?
Yeah. It's a castle spa. And then I wanted to go to Blue Hill and Stone Barns. Is that still there, that restaurant?
It's not what it used to be. A lot cooler. It's still there. The farm is there. It's always really great to see.
But what about the restaurant? Is the restaurant there? I'm there to eat.
It's I think they only do like tasting menu. I don't think you can do a la carte anymore.
That's fine. I'm good with the tasting menu.
It's lights out. I love that place. It's gorgeous up there. The food's fantastic. But it's the full, the full Monty. It's the full, you're there for everything with the pairings.
I can do that, Jeff. I don't know if you heard.
I can do it too.
It's kind of my thing.
If you want to go hang out in Tarrytown and have a little fun while you're there too, there's plenty to do there. There's a lot of cool restaurants.
Yeah. I'm gonna bring my wife there on a romantic weekend. I'll be like, yeah, Jeff Hirsch is gonna come hang out with us too. Yeah, that's gonna go great.
It doesn't have to be me. You could take her to other places. It's a hip little town, very Nyack-y. There's a lot more there. There's also the music hall if you want to go see some tunes or catch a band or something.
You've been to concerts before? Have you ever gone to a concert, Jeff?
Couple. I was at the Stone Pony Summer Stage last week.
Hey, nice.
A little jam band with my son.
Did you guys get hammered too hard by the rain the other night, or no?
We got skirted it in Nyack. I heard Perlman avoided it too out there, but there was some heavy duty rain just north of us, like by West Point and Highland Falls.
Right.
Crushed.
Hey, real fast from the chat, who asked about this? Paul, what do you think about the NASDAQ rebalancing? We'll talk about that on Monday. They're going to announce what the changes that they're actually going to make. Because
there's no change. They're not even changing anything.
Well, no, they're changing the weightings, right? They're not adding. Right. So, but they're going to announce it Friday, night. And so there will be a wave of forced buying and selling as a result of this, because there's $250 billion which isn't actually that much, but tracks this index, maybe more. Actually, no, that's just the ETF side. So definitely more with mutual funds. But, there will be some forced buying and selling as a result. We'll know what that is going to be on Friday. So we'll talk about it on Monday. And, I don't know if there's any trades for it. It's a telegraphed event. So, but what
about the Russell rebalancing? Isn't that a little bit more impactful?
And we're past it. It's over. So
I don't remember there being anything that happened. Right? It was a non-event, right?
Third or fourth Friday in June. Third Friday in June, and they put the list out the end of May, and you can buy what they're going to add and sell what they're going to delete if you want, but it's not always that simple. So,
do you know what the largest component in the Russell 2000 is? What sector is it? Don't look.
Tech.
What is it?
Technology.
Nope.
Oh God, I'm afraid.
Industrial.
Healthcare is number one at 17%. Technology is number two at 16. Industrials are basically the same as tech at 16.
Oh, I thought you were asking about the stock.
It's sector.
Yeah.
Oh, all right.
Yeah.
That's why I answered tech.
As far as the stock goes, it's pretty evenly weighted. There's nothing,
that's what I was going to say. Is it GameStop?
There's nothing that's more than 0.5%. You know what the largest component of the Russell 2000 is officially? Super microcomputer, SMC.
Super micro.
What?
That's Jeff's stock. That's right. Isn't that yours?
It was.
It's
My
Jeff's.
personal stock. It just came through the screens, you know.
My question with the rebalancing thing is like if they cut down, because the whole point they're doing this is to cut down the impact of the Magnificent Seven. And if you cut them down, unless you cap them, like doesn't it just allow them more room to keep going and keep getting bigger? Like you know, rinse and repeat kind of thing.
Yeah, I mean, I think they did this once or twice before. I think they did this in 2011 as well. So
okay,
yeah, maybe 10 years from now. I don't know. Yeah, but by the way, when did Magnificent Seven? When did that become a thing?
I just started seeing it like recently, very recently.
What are they talking about, Magnificent Seven?
It's Fanning is dead, JC. It's the Magnificent Seven now.
Are they still saying that 7 stocks are going up? What is wrong with you?
Yeah, it's the Magnificent Seven.
Aren't they the same stocks though?
I still see people tweeting breadth charts from using May's data from 2 months ago, and yeah, it blows my mind.
Hey, listen, this is your competition, guys. This is your competition. Humans are dumb. Like, there's a lot of money to be made out there.
That's it.
Can we just talk about something quickly? I mean, you want to hear something ridiculous. This is the state of what is referred to as Wall Street sell side. Citigroup, with what these idiots did yesterday. This is Citigroup. For those wondering, yes, Citigroup actually does still exist. I was surprised myself. Citigroup downgraded the S&P 500 yesterday with a target of 4,000. By the way, the S&P 500 is at over 4,400. Actually, it's near 4,450 on the S&P 500. They downgraded it with a target of 4,000. By the way, they came into the year with a target of 3,900. So what are they even downgrading? So if you're confused, you're not alone. This is Wall Street sell side. This is your competition, folks.
But on that same note, people were making talking about the analyst coverage in Kava yesterday, or the initiations, all the bullish commentary from the analysts on Kava, which is like the stupidest thing ever, because these are all the IPO underwriters coming out and saying and giving the stock a buy rate. And I'm like, yeah,
of course,
no shit. Like what they can do? Tell you to not buy the stock they just took public? I mean, stupid. I don't know. The whole thing is dumb.
Well, I'll tell you what, Spencer. Remember we had the conversation on the day of the IPO that how essentially I trade IPOs, how I look to put positions on, and I look for those initial pivot points, both highs and lows, and they come into play in the future. Well, here we are in Kava, and the pivot high on the IPO day was up near 48. So with the stock in the low 40s sort of creeping, you can kind of think of it like a bull flag. Think of the pre-IPO as sort of the uptrend. And then since the IPO, it's been a sideways range. So I'm looking at it as a bull flag. If we're able to break out above the highs from the IPO, above 48, I'm in.
All right. I haven't been watching
this
it super closely.
This is the Greek Chipotle, Jeff. I don't know if you heard about
this. Is it? No, I'm looking at it. I'm
really good. I like it.
You've had it?
Yeah, it's on my list.
It's really good. I mean, you nailed it. It's like Chipotle, but Mediterranean.
I heard it's not as clean as Chipotle.
I actually think it's better. I feel like it's like better ingredients than Chipotle.
No. Like the facilities aren't as clean.
Oh,
what?
I mean, I've never thought Chipotles are like the cleanest places on earth.
No, all right.
They're not bad. They're nice.
I haven't been. I'm just telling you what I heard. Nikki said it's more hipster. All right.
It's more hipster.
All right, real fast before we go, let's bring up the earnings calendar. You can see nothing actually today or tomorrow really, but Thursday or Friday we're getting going on the earnings front. Very exciting there. If you're looking at our channel as far as programming on Stock Market TV, we've got CRL Chart Request Live today at 1:00. Myself and Patrick going to be on the show. We already got a few emails. If you want to cut the front of the line, send us an email, questions@stockmarketmedia.com. Put your request in writing there, and you will cut the line in the YouTube chat. And that's what I've got. So huge shout out to Jeff Hirsch for hanging out with us today. We appreciate that, Mr. Hirsch. Any final? I'll let you sign off. Any final thoughts for us before we go?
First, thanks for having me, guys. Lots of fun. Great to have Patrick on and Kimmy also. Just reiterate, the pre-election year seasonal pattern here. I mean, don't get too crazy about having to buy stocks here. Keep your powder dry. The summer volume doldrums are here. Do your research and wait for a little pullback. I'm not getting super bullish right here in July.
I'm buying stocks.
I think you get a better price in August, September, October.
I guess that's the beauty of having dry powder is you can buy stocks. You have money to buy stocks with. All right, that'll be a wrap, guys. Smash that like. It's the thumbs up button. It looks like that on YouTube. We appreciate that very much. See you guys later for CRL. Let's go make some money.
Adios.
Cheers.
Run it. I can't take no loss. I don't even know what it costs.